Let's get started with Market Fatafat and all those stocks that are buzzing in trade either on the back of news flows or on the back of technicals as well. And today the team of researchers that we have joining in with us, we have Shesha joining in with us from the research team, as well as we also have Harsh joining in with us. And with me to co-anchor, I have Shrishti Sharma joining in with us as well. Shrishti, a very good afternoon to you as well, and good afternoon to all our viewers as well as our research team as well. On that note, let me start with the first stock that is buzzing in trade and in focus today. We will start with Dixon Technologies. That is in focus, and we're seeing pressure coming in on the stock because it was a bit of a weakness that we saw in terms of the numbers that came in from the company. When you saw the revenue growth, yes, it was up by 14.6%, but when you look at the lighting and electricals business, that was a bit of a pressure on that front where they didn't perform that well. The demand trends over there were seeing a bit of a weakness coming in as well. And when you look at it in terms of the net profit of the company, yes, up 50%. EBITDA margin at 4% versus 3.5%, 52 basis point increase on a year-on-year basis as well. But what we're seeing in terms of the concern is that the demand trends, how are that shaping up? In the con call, they did highlight that they did receive some big orders from Jio Bharat phones as well. So mobile segment continued to do well. Lighting and the consumer electronic segment, that was the one where they saw a bit of a pressure coming in on a year-on-year basis over there as well. So that is something that everyone is watching out for. Also this time around, the margin guidance or revenue guidance is not something that the company has given. So that is something that everyone's keeping an eye out on, and even the brokerages are highlighting that point as well. So yes, Dixon Tech as of now just trading with gains of 0.3%, Shrishti.
Okay, moving on, and let's shift focus to the tire maker Ceat. This particular counter reported its earnings, and as expected, a stellar set by the company where the revenue has seen a jump of 4.5% on a YY basis, but the net profit is now standing at 145 crores, and sequentially as well, we have seen a good jump in this particular number. The margins have also seen an improvement to 13.2% this time around, while the EBITDA also saw a good growth. On the back of this, Ceat is definitely holding itself in the green, but from the management commentary as well, what we are getting to understand that this time the RM basket cool off, which was around 1.5% on a sequential basis, the RM cost inflation was actually down sequentially. That actually helped the margins to boost up. But going ahead, the prices of the crude will be the key to watch out for. As of now, the demands hold stable. They are positive on the export outlook as well. But how the crude oil prices are shaping up, because recently there has been a jump up, so the management is highlighting that is the key to watch out for. But they are positive on the margin as well as the growth guidance for Ceat, and that's why after a good set, the stock is still holding itself in the green right now.
Okay, still holding on to green, and that is Ceat for you. Let's move on to stock number 3 for today. And Harsh, SBI Life, how are the numbers looking like for this company? What is it? Anything in terms of brokerage notes coming in as well?
Well, yes. So, Vinny, first off on the numbers, what we're seeing is a slightly muted set overall. We're seeing net premium income grow quite well at 19%, but we're seeing APE growth largely flat on a year-on-year basis at just 3,000 crore versus the 2,900 crore number same time last year. Profit after tax surged, but that's not really the best metric to look at when it comes to life insurers. You're looking at new business premium up just 11%. You're seeing persistency ratios, at least a few of them in that 13 to around 60th month persistency ratios on the decline. So again, not great on that front. Value of new business also declined year on year by just about 1%, but a decline nonetheless. And you're seeing margin declines. So largely with regard to expectations, around a 30% margin expected, 28.8% is where that margin number is at. And even brokerages are largely bullish on the counter, suggesting that this is probably a one-off quarter. Going forward, they're expecting margins to come in better. They're expecting even the AP growth to come in strong, with that SBI being the banker assurance partner for SBI Life. And what they're also suggesting is broadly the target price should be around 1,500 or thereabouts per share.
Okay, moving on. But before talking about the fourth stock that is in focus, we'll go to Shesha. But before that, viewers, it's time to slip into a short break. Don't go anywhere. We'll be right back with more.